Okay, let's take the discussion forward and bring on board Anand Tandon as well. Anand, what's your view on the auto stocks? Because TVS Motors yesterday posted numbers, saw an unnecessary dip, is making up today. Is it going to be similar for Bajaj Auto?
Well, the numbers for TVS were good, but the question is what is happening from here on. It does appear that the inventory levels in some of these auto companies have started to rise, and that will mean that getting into the festive season as we are, that will obviously put some amount of constraint in terms of how much more channel stuffing the companies will be able to do in preparation for the demand in the second half of the year. Overall, I think you have to keep in mind that the overall numbers, for example, for two-wheelers, is still significantly lower than where it was pre-pandemic. And the market caps have gone up significantly from there, despite the fact that there have been a whole new bunch of companies which have come in because of the EV cycle. So net, I think much of this has run its course, and I would be a little cautious from here on in terms of how much more upside remains.
Motors. Do you have the same view for Tata Motors as well? Because it's still a re-rating candidate for quite a few people with the JLR turnaround and the cash conversion story.
Well, yes, that story is well known and well advertised, and the management has made sure that every analyst understands that they'll be paying back a large amount of the international debt. But if you look at the valuations compared to some of the other international players in the car business, you would find that it is actually now trading at a premium somewhat to some of the other equivalent companies. And on the domestic side, as I said, I think you've seen the best period already being priced in, largely because of the kind of price movement that we've seen. So overall, the whole sector to me looks a little iffy from here.
Anand, what could be the next leader for the market? Reliance has got its trigger out. ITC, the trigger has been played out. Banks, we've got the numbers already. HDFC Bank Limited merger has gone through. Anisha and me were discussing in the morning that for markets to go higher, it needs a leader. It needs a push. It needs an engine. Where is that engine? Where is the leadership going to come from?
I think that's a very good question, Nikunj, and I don't think there is an easy answer. I think the front end of the frontline players in the market look reasonably, if not slightly overpriced. There is no particular trigger other than the macro. There could be there is a lot of expectation riding on the fact that the US interest rates will not rise further from here. I don't agree, but, just in case that were to come true, I think, to some extent the optimism may continue for a while. On the domestic market, you are likely to see the second half of the year, to my mind at least, showing a higher energy price. If you look at global inventories for fuel, it is very low, and despite that, the demand is likely to be increasing in the second half of the year. So I think there are macro issues which the market is tending to ignore at this stage, both globally as well as within the country. And that is the reason why I'm saying that, with a valuation which is already somewhat stretched, if you actually believe that the inflation is going to come down, I would imagine that the earnings that the analysts are factoring in will be less than what we are already factoring in, because the analysts have extrapolated from last year and assumed that the profitability and profits will remain or will improve from here on because you'll be able to pass on the price. And yet we are talking about a lower inflationary number. So net, I think there is there is a lack of consistency in the argument. Frontline, therefore, to me appears to be somewhat overpriced, and when that situation happens and you have to start scratching for the bottom of the barrel to find where the next right idea is, then obviously it means that for the near term at least the market has to pause and give you some time to catch up for the earnings.
Anand, in general, cement numbers have not been great. Is the concern valid that the impact of low coal prices and transport cost has not kicked in?
So I think cement, if you look, at the two markets which are doing well, which is basically the south and the west, there is also a large amount of capacity that is coming up. Take Ultratech, for example. That is one of the few companies which is actually operating at high capacity utilizations, upwards of 88%. They themselves have not been able to raise prices because they are pushing volumes and their expansion continues apace. So, they'll be adding another few million tons in the next couple of years. and therefore a large part of the demand will get absorbed by the new incremental capacity. If you look at the East, for example, numbers are a little more stable in terms of where the pricing is. There is a little better discipline, but there isn't that much demand. And as a consequence, those which are operating in that area are also likely to get, not likely to do anything great. The one joker in the pack for cement was likely to be the acquisitive movements of the Adani Group, and that has now been put paid after the fiasco that we had. And there is no chance now that they're going to be very aggressive in the market. So net, I think this is likely to remain a sector which will over-promise and under-deliver.
Anand, what's your take on L&T pre-election year? Usually it's a good time for the companies like L&T.
Well, L&T has been doing very well as a stock as well as from the business performance point of view. Of course, a large part of their valuation can now be justified because of the technology elements that they have. But overall, their core business of construction and engineering has done reasonably well, continues to do well. And more importantly, because of the lack of large cap names in that sector, if you are looking at that sector because of the fact that the order books are bulging, there aren't that many alternatives. So pretty much if you're a fund, you have to buy L&T. So I think there is a floor there as well. So it's a stock which is probably in the best of worlds, should be part of the portfolio even at this stage, I guess.
Let me take it across to Anand to find out his view regarding Tech Mahindra and the other IT companies. Tech Mahindra is expected to be quite weak given the communication exposure it has. But for the overall IT sector, KPIT, Cyient, etc. and the other IT companies, what's your view?
Well, obviously, after Infosys gave us such a pessimistic guidance, the mood has changed for IT. The question is, at what level do you start buying, and do you assume that there is going to be a permanent damage, or is there going to be this too shall pass? I am of the camp that it's not as if the AI, and though I have examined it to some extent, I don't think that it is something that cannot be handled by the companies. I think we are still some distance away from every man becoming a programmer by himself by using AI. So I think you will continue to have one more round of perhaps business shakeout before the companies figure out the new business model and start using more some of these tools themselves to deliver value for the customers. Overall, I think at a certain point, and maybe the point is not yet reached, but at a certain point the IT companies will start looking at will start to bottom out, given the fact that they still generate a fairly reasonable ROE, etc. So I think, wait for a little longer, but I think one should be keeping an eye out for when to enter. Obviously, from a technical point of view, it won't be looking very attractive, but, I think it would be worthwhile to buy the first bounce whenever it happens.